Hi everyone, I'm Nikita Poojary. Welcome back to Market Pulse with Aditya Nikita. Let's get started with the multi-time frame for Nifty, BankNifty and Sensex, and we will also discuss few upcoming sectors that are looking really bullish. So without wasting any time, let's get started. So starting from the monthly time frame, although this is not going to be very fruitful because we are on the 19th of September as of now. So we have half a month to go. But just to give a sense, I can clearly see that the market is in an uptrend and the market is trying to consolidate on the upper 1/3 area. Looks like in case if it consolidates for a more longer time, it looks like a clean flag, but nonetheless this pattern is still bullish, and we are not very far from the previous ATH of 26,200. Things are looking really good. Now let's quickly go on the weekly time frame. On the weekly time frame, as you can clearly see, it's a clean W pattern, and we have got a clear breakout above this particular neckline of the W pattern, and this basically indicates that the momentum on the upside should continue. So if I just tell you that any retracement till 25 150 zones, that's like a clean level to actually enter into longs. Let's go on the daily time frame. We have already discussed this support had been tested several times, like 24 350 zones. However, the market refused to break this level, and instead market broke this resistance which had already been tested 4 times, and finally we got a breakout, and the up move has been continuing ever since. Okay, so now what from here? Now we can clearly see that the market has given a stupendous rally right from 24 350 to all the way till 25 400 as of now. So that's like a very good rally. But now what are we expecting? We are basically expecting, even if there is a pullback, that pullback will be utilized by the buyers to go long or to add into their existing positions. Okay, because I'm expecting that the market is going to continue its upward journey, and it is not only going to stop from till its previous ATH, but it is definitely going to surpass its previous ATH. Now we'll see how that happens and when that happens. Coming to the 15-minute time frame, we can clearly see that the market is in a clear uptrend, like higher high, higher low structure, and don't be in a hurry to short the market, because what will happen, unless and until the market breaks any sort of a significant swing low, it doesn't make sense to enter into shorts in a haphazard manner. It is only this what happens in a bullish kind of a market. What the typical market behaves is like, you close somewhere here, market opens with the gap up, then after this initial momentum it will try to slide down, and then it will try to recover and come up in the second half. You can see usually that's how it happens. Here also it gapped up, tried to come down, then went up, and then again closed sideways. Again the next day same thing happened. Here we had a fantabulous rally on this particular day, and again after this gap up, nothing much, tried to come down, slide down, again an up move, opened with the gap up, tried to come down, and this was yesterday's candle, and in the last two candles it almost recovered its entire fall. Again today it came down like anything and then tried to again move up. So this is a typical behavior of a bullish market. It opens with a gap up, does nothing, and tries to slide down, and these are basically the people who would want to enter into longs. And so it is very important that you enter at the right position. Like for example, yesterday whoever would have carried long positions, that is, I'm talking from the perspective of an option seller. So we basically go long, means we basically short the puts. Okay, so yesterday whoever would have short their puts and carried it overnight, the puts would have definitely spiked in this particular down move momentum, right? And the market was almost at day's low till 12:30 in the noon, and only after later in the second half it tried to move up. So puts would have definitely spiked. So it's very important to enter at the right level, and not to like go long at any level. So wait for some sort of a retracement. If you have failed to capture this entire rally, then just wait for some sort of a retracement, let the market retrace, and then try to go long. Now, as I said, since this is just the first pullback, don't be in a hurry to short the market. So in fact today also we definitely broke below the previous day low, and we stayed there for some time, but again on the closing basis we closed above the previous day's close. Okay, now in this case what I'm seeing, that until and unless this 25 250 or 260 level is taken out, no point in shorting the market aggressively. And even then, if let's assume that even this level gets taken out, then I would definitely like to go into strangles, because then strangles makes more sense, because then I can target calls above this level, which is 25 450, and puts basically below 25,000. So then for me, I'll get some sort of a reference point in case market breaks below 25 25,250. Then I can safely assume, okay, this is my reference point. Basically, this would be my sell on the call side, and 25,000 would be my sell on the put side. So then that's how I will plan my trades. So I'm not a SEBI registered advisor, so don't act on what I say. You just plan your trades on your own, or you consult your financial advisor. I'm just sharing what I'm planning to do. Coming to the levels, I have already marked these levels and I will post it on my X profile, so you can go and check there. So I'm basically I'm looking for puts below 25,000, and this is a small trend line that the market has been respecting from quite some time. One is that, and from the level perspective, if 25,250 gets taken out, then I will get a reference point for my call sell. Basically, I'll get an SL for my call sell. Until that happens, I am not interested into selling any sort of calls. Let's quickly cover Bank Nifty as well. So in the Bank Nifty, we have broken this kind of a resistance, and after that, this is more or less looks like a retest on a higher time frame. So on a higher time frame, nothing looks bad at all on Bank Nifty. Again, Bank Nifty, if you can see, I mean, it is trying to move on its upward journey. Although we need to cross above this particular zone of 56,150 zones. Not that it is not bearish, but I'm saying on the daily time frame, I can show you why that level needs to be taken out. This is the recent swing high on the daily. So this is the swing high. After that was this swing low, then this swing high, and this swing low. So it needs to break this swing high at least to make the structure bullish on the daily time frame at least. So we need to break above this structure now. But what has happened? Market has already rallied from all the way from I guess it is 53. Let me see the low. Yeah, 53,550. All the way from 53,550 to almost 56,000. Almost. Okay. Which means a market has rallied enough. And now, even if market comes here and stays here now for some days and then gives a big breakout, that will be really good for Bank Nifty. So let's see what happens. So in case of Bank Nifty is also, you can see it is clearly higher high, higher lows on daily basis as well. So in case of Bank Nifty, although there is one sort of a reference point of 55,750 till 55,800, one can keep this level into a picture. And then one can, basically sell strangles, keeping an SL of this level on the call side. And for the put side, the better level would be somewhere around 55,000, I would say. Now, for those of you, okay, I'll change this level because I have mentioned it wrongly. It is 55,000. But then this is applicable for those of you who are selling Bank Nifty, because there is no Bank Nifty weeklies. So we basically don't trade on Bank Nifty anymore unless it's a last week of the month. And then too, we basically evaluate the opportunities that are there between Nifty and Bank Nifty, and then we go with whatever the option is lucrative. So these are the levels for Bank Nifty as well. Now let's quickly go and check Sensex. Same plan as Nifty for Sensex as well. So in case of Sensex, if we break below 82,450, only then I'm interested into carrying strangles. Until and unless that happens, I'm just going to short the puts at any dips. So basically the market is in such an uptrend. It's basically more sort of a buy on dip. So we have to wait patiently for the dip. Like this level looks like a very nice kind of a retracement, but we need to wait. See, buying on dips doesn't mean that whenever the market or the prices touch the S1, you have to go long. You have to wait and you have to check whether the market is making some sort of a bullish pattern or some sort of a hammer kind of a reversal pattern or bullish engulfing. We need some sort of a confirmation to enter into longs, because usually in such places we will get smaller SLs and better entries. So that's about it for Nifty, Bank Nifty and Sensex. Now coming to the sector analysis, one of the sectors that I'm looking at is Nifty PSU Bank. You would have already seen how Nifty PSU banks have rallied this particular week, be it Bank of Baroda, be it PNB, be it Canara Bank. All the PSU banks have rallied like anything. So if you are not able to capture a particular banks, though, then this is the sector that you should look into. I'll be definitely planning to take some positions in ETFs of this particular PSU, but then you have to wait for some sort of a dips. In case you get some sort of a dip, then definitely it's better to take an entry. Although this is not a recommendation, you have to check with your financial advisor. This is what I am planning to do because this sector is looking very promising to me. Okay. So what I can can clearly see that there is an inverse head and shoulder structure in this kind of scenario. Plus there is a break of pole and flag pattern, and then there is a break of this particular resistance of 7230. Okay, let me just hide this particular head and shoulders pattern, so then you can check the pole and flag. This is the pole and flag structure. Okay, so these are the reasons why I am interested in this particular pattern, in this particular sector. So this is the sector that I am looking at. The next sector that we will talk about is sector that I'm interested is after the Nifty PSU is Nifty PSE. Basically, PSU are the public sector banks, okay, and PSEs are all the public sector enterprises like ONGC, BPCL, and all of those things, okay. So in this case, clear W breakout as well as a clean resistance breakout, and it's not very far from its previous this one like July high levels. So in case of any retracement, I would definitely look into building my positions in this particular ETF as well. The third and the one of the my favorite this one sector is going to be the defense sector, and after this particular breakout of this structure, market basically tried to retrace. So see, this is basically a breakout and then sort of a retrace, and then it is trying to move up. And here also, if you see, there is a clean sort of a W in place in case of weekly, and in daily also, if you see, the market has clearly crossed above this particular 88 level, and the market is trying to sustain above that particular level. So any sort of a retracement, again, I'm going to look into adding my or building my positions. I already have this one defense, so I'll be adding to my existing positions. So these are the three sectors that I'm looking at. Let me know on the comment section what are the sectors that you are looking at, so that I also don't miss out on anything. Coming to BTC, no such movement on the higher time frame, like BTC is stuck within this particular range, but there are so beautiful trades that are forming within the smaller time frames. So this level has already taken out on today only, today 3:15. So this was a good level to basically short. I have actually marked this already, and then but I have forgotten to put an alert, so I definitely missed this particular trade. So this was the best level to short the market with this as your SL, and you could have basically taken this particular utilized this particular entire rally. So now let's see, after now, but then I don't trade a lot in case of BTC, neither. Like, my exposure is not very high. My entire exposure is more on the NSE, basically Nifty expiries all this time. So this is basically just to test the waters and just to see whether that broker is good enough or not. So, but I'm not recommending anyone, just that I'm just telling you how basically the price, the best part about the price action trading, it remains same across any sort of a thing, be it gold, be it silver, be it BTC. So this is the breakdown. So I'll basically enter at the close of this particular entry. If you want a very small stop loss, you can basically place an SL of this breakdown candle, but the chances of your SL getting hit is also higher. So for safer people, I would prefer simple SL as this, my swing high, and then let the market do its work. That's about it. Let's quickly go on the Q&A section. Thank you so much for sharing your insights. Can you please shed some light on how you manage your positions with the SL? See, you can't do anything. That's like the mandate, and everyone has to play by the same rules. So we also take basically 70% of our exposure. That's all. Which broker? See, we don't recommend any broker or as such. But since you have asked us which brokers we use Toko. And someone has already answered it here. Yeah, SAS, earlier known as SAS, now it is known as Toko. We basically do weekly expiries. So we have already, just to answer your question, we already have overnight positions in our accounts right now, because we are playing for the upcoming Tuesday expiry, which is on 23rd. How do you decide the stop loss? Suppose you sell a put or a call premium of 10, then what will be your stop loss? Okay, so very important question. Like, I'll just take you through this question first. Okay, let's assume this day I would have sold a 10 rupee option. Let's assume I would have sold a 10 rupee option here, and I would have carried it overnight. Now, in the first half of this sharp down move, the puts have spiked definitely more than double in lot many cases. If I would have kept double my SL, so then definitely I would have lost. So I usually now try to play by the levels as well, but it's not recommended for everyone. So you have to basically because see, in case of level SL, what happens, one day it will definitely try to go more down, and then you will end up losing a lot. So either you play by your level based SLs, or you simply play by your double wala SL method. But then whatever you do, just be consistent to it. Just don't switch sides all of a sudden, because then you will get butchered on both the sides. So the usual practice is to keep 2x kind of a thing. If you think there can be some sort of a higher volatility, so then you might keep it till 2.5x, but not more than that. But if you are playing a level based, then x or 3x shouldn't matter if you are playing a level based kind of a stop loss. But then this question can't be answered that easily. This is what the entire workshop is all about, because it depends upon what sort of temperament you have, or what are you expecting for this particular week, or how the markets have changed its trajectory, like which regime we are into. Thank you very much. Naked option selling is very risky as it exposes one to the possibility of infinite loss. It's not clear why you avoid. See, that's what this is what we have been fed. This is the textbook lesson. Okay, this is just a textbook lesson. Okay, this is what they, I mean, this is what they teach you, so then no one tries to go and do option selling. Now remember, option selling has always been bigger boy kind of a game, right? Why? Because they don't want the smaller guys to enter into this game. Now that a lot many people have entered, now that is pinching them, then that is the reason we are seeing so much of rule change, this and that. But this is just the basic textbook kind of a thing. But I would recommend you to just go and read books which counters this and try to understand why it is definitely makes sense to go for naked rather than hedging. Or if you want, I will definitely explain it, but as I said, it is a different topic in itself. I would definitely like to cover it, but it's a very different topic, and it's more of a debate, like what you want. Like, people prefer peace of mind, and they like to bleed every single day by paying a cost to the hedge. If you are okay with that, that's okay. I am not that kind of a person. I don't want to bleed every day by paying a cost to my hedge. It's okay, once in a while I'll take a hit, that's okay, but black swan is not going to happen every single day. But it's like, I believe that if you're buying hedges every single day, you're definitely going to invite a black swan for yourself, especially given such low premiums in this kind of a market. Midweek analysis, a real short. Okay, I was really, Aditya ji, I was really planning in this particular week to cover that, midweek analysis, but somehow I couldn't do so, but I will definitely plan to do. Tuesday, Wednesday. Yes, I will try to cover that. That's the plan. I was planning to cover it either on a Tuesday or a Wednesday for the upcoming Nifty weekly expiry. Yeah, even we are not aware about what SEBI has plans, whether it wants to make it bi-monthly, monthly, whatever it is. Anyways, we have to play by the rules. We can't do anything more than that. Everyone will be given the same game. Okay, Harpreet ji, you didn't get my point last time regarding the hedge. I did not ask you to sell the 22 premium in place of 12, but to double the quantity. Same thing, sir. If you don't increase the 22 premium, it's okay, but you're increasing the quantity. So let's assume on a normal day, let's assume you are selling 1800 quantity. Okay, so now you would have taken a loss on 12 rupees of 1800 quantity. Now let's assume assuming your SL is double. Now instead of 1800, you are selling 3600 because you're doubling the quantity. Now multiply this by 12, you will know the answer. Your loss will definitely size up now, because leverage is a double-edged sword. You need to understand that either you do this way or that way. Either ways, you are going to lose by a larger margin. So this doesn't make sense to me, at least. If it works for you, then yes, sir. I'm so sorry that I didn't read your comments carefully, but just to tell you, share what I'm trying to explain. Let's assume your 12 rupee option premium SL is 24, which means if you lose, you will lose 12 points. Okay. So in case of 1800, you are going to lose 21,600 quantity. Okay. Now, just because you want to buy a hedge and you are trying to extract that cost of hedge by selling double the positions. So instead of 1800, you are going to sell 3600, and so straight away your loss will increase from 20k to directly 40k. That's what I'm trying to explain you. Any which ways, you're going to lose large. Let me know if there is anything else to address, sir. What's your opinion on spreads? I have actually covered this. That's about it. If you like this particular video, please don't forget to hit the like button. It really motivates us. And please do comment as to what all sectors that you are looking at for the upcoming up move in Nifty. Thank you so much for your time. Bye-bye. Take care.